Let's welcome our guest first. Mr. Seshagiri Rao, Joint Managing Director and Group CFO of JSW Steel, joins us now. Good morning, Mr. Rao. Thank you very much indeed for joining us. Before I get into the complicated coal auctions thing for which we actually wanted you, just a word on what does this Russian fall mean for global steel prices? Some of the CIS companies also sell steel. We understand there is a goodish bit of undercutting now with China, which also is in a mood to undercut since its domestic steel consumption is falling. What's the global steel price? Are your landed prices becoming a bit of a competition?
Yeah, that is true, because the currency devaluation which has happened for the last few months, either ruble or Japanese yen or Korean won, it has an impact on the international prices, adding to that Chinese slowdown. So the countries which are export dependent, those countries are producing more steel and looking for markets. That is also supported by the devaluation of those currencies. That is why we have seen in this quarter the prices dropping internationally. But now we are seeing a little stability in the prices. The scrap prices started looking up, which has gone down below $300. Now we are seeing $320 per ton. So scrap prices started looking up. And also the raw material price fall, which was there, like iron ore around $70 and the coking coal at $110. They are all indications that the stability is there in the prices internationally. So correction already happened in the last 2.5 months.
Okay. Morning, Mr. Rao, and thanks so much for joining in. Appreciate your time. We'll talk more about the prices and the outlook there, but first a word on the approach paper on the coal auctions, which was laid out yesterday. So there is a provision that the total extractable reserve price cannot exceed 150% of the coal requirement, for the company for 30 years. So can you tell us what is JSW Steel's coal requirement, and therefore what is the maximum amount, of coal you can bid for in the mines?
As far as coking coal is concerned, our annual requirement is around 7 to 8 million ton per annum at the current level of production. So 7 to 8 million ton will translate to 150% of that is around 10.5 to 11 million ton. So if you take 30 years, it is over 300 million ton the total requirement. If you again look at the resources, this is the final output which is required. So I think based on the stripping ratio, we need more coal over really 300 million ton of the finished product. Means the actual requirement is over 500 million ton plus based on stripping ratio.
But you can't take into account potential expansions. You have to go with the 30-year projection of your current investment.
As the restriction there is 80% of the end-use plant should have been done. And therefore, we cannot take the potential. The end-use plant should be ready.
Okay.
So current requirement is relevant.
What's your sense, though? Do you expect that you're going to see a dramatic rise in, or at least some rise in your input prices? Should we be prepared in FY16 or in FY17, in FY16, for a pressure on margins on account of this?
We are anyhow importer of coking coal. If at all we are able to get locally the coking coal, I think it will reduce the cost instead of increasing the cost, because we are importing it right now. So I don't think as far as JSW Steel is concerned, it will have any negative impact.
Okay. Now, let me just finish the steel, the Russian-Chinese competition argument. I understand from our in-house research expert that CIS prices are down in the past 1 month by 8.5%, European prices by 5%, but domestic prices have fallen by 3%. Is there any price cut that we should expect from a company like yours?
No, it is not correct to just say that international prices have fallen and the domestic prices have not fallen. If the domestic prices are not adjusted in line with the landed cost of imports, I think the imports will increase quite high.
Yeah.
But I don't think that is the scenario. Domestic prices are also corrected in line with the landed cost of imports. In fact, in the last few days, the rupee depreciated by almost 1.5 to 2 rupees. So in fact, there is an increase in the landed cost of imports on account of that. So I don't agree that the domestic prices are not aligned with the landed cost of imports.
Okay. Can you tell us then, sir, what has been the total correction in the prices in the quarter gone by, that's up until now?
That was the domestic prices are also corrected almost close to 5 to 6%.
In the quarter, so far?
Yes.
Okay. What is the status of mining in the country at all? We have seen in state after state the court allowing mining, but we also get ground reports that there is still a lot of hesitation on the part of state governments to either renew leases or permit mining where it was banned earlier. Are people really taking decisions in the mining space, or are you just being footballed from center to state?
So it is a matter of concern as far as the iron ore overall production relative to the demand is concerned. There is a gap. That gap is not getting filled up. There is a lot of hope that the more production will come into operation either in Orissa or Karnataka. But we are not seeing anything happening on the ground. That is why the imports are increasing into India as far as iron ore is concerned. So in this year, at least 10 to 15 million tons of iron ore imports are happening. So this is a matter of concern. We are seeing commentary that iron ore exports are not happening. The major concern today, the domestic steel industry is not able to get adequate iron ore to produce steel. So we are importing really the steel into India because lack of iron ore in India.
Okay. And you're not seeing any policy progress on this? No one is seized of the problem?
Seized of the problem, but nothing is happening on the ground. That is the major concern because several approvals are required. So they are taking their own time. That's why in every state where iron ore is getting produced, either Jharkhand or Chhattisgarh or Orissa or Goa or Karnataka, there are the major 5 states where iron ore is produced in India. So the total iron ore production in this year is not expected to be more than 105-110 million ton as against 135 million ton in the last year. So there is a reduction of almost close to 25 million ton. So that is causing a huge pain to the industry, leading to more imports and not able to produce to the capacity.
Okay. You told us about a 5 to 6% decline in the domestic steel prices. In this quarter, sir, how have the raw material costs panned out? What has been the decline in coking coal as well as in, thermal coal? And therefore, how will your margins look in, Q3?
Margins are definitely under pressure, but even though the iron ore prices got corrected relative to the last quarter, so it came down as low as $70 to $69. So that is the price at which iron ore prices are stabilizing. So there is some benefit on account of lower iron ore prices. But at the same time, coal prices are stable. Whereas because of the currency depreciation which has happened overseas, either yen or ruble, it has put some pressure on the international steel prices. So prices got corrected. So margins in this quarter is definitely under pressure.
Mr. Rao, what's your, are you still on track to meet your sales target of 12.4 million tons for FY15?
We have been continuously talking about this, that way we will produce 12.9 million ton of crude steel and sales of 12.4 million ton. We are on track. We'll be able to achieve that.
And you have already got an FY16 guidance?
Sorry?
Any FY16 guidance?
FY16 guidance, I think we will give in the next quarter. So we will work out the numbers.
Okay. Just one word, as a final, parting statement on the coal auctions yet again. Do you think the actual cleared price to be significantly higher than the floor price?
3, 2, 1. Congratulations.
It depends upon the requirement of each of the companies. I think there will be an aggressive bidding because there is a huge need for the coal in India. Most of the companies which are dependent, where their end-use plants are already ready, and they will not get the coal if they don't get it in this e-auction. I think there will be definitely aggressive bidding in the coal auctions.
All right. Mr. Rao, it was a pleasure speaking with you. Thank you very much for dropping by today, this morning.
And Happy New Year as well. So I'm not sure if we'll speak again, so Happy New Year as well.
Thank you. Happy New Year. Thank you.
Okay.